Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss Nasdaq-100 weekly performance. We'll also touch on that key Fed decision that was released this afternoon, and of course we have the reconstitution on Friday. Ryan, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Busy week for us.
Yeah, it has been a very busy week as the Nasdaq-100 and of course all the indexes were anticipating what came out at 2 o'clock this afternoon.
Yeah, I think you look over the past week, and it was a challenging week for stocks with QQQ and QQQM both down 2.51%, S&P 500 down 1.09%, and S&P 500 value down 26 basis points. But obviously, just a lot of anticipation for today, which was Fed Day, and finally the word transitory has been dropped from the language. The FOMC announced that they're going to double the pace of their asset purchases to $30 billion a month, up from 15. Which will put the end of their quantitative easing program in early 2022 rather than the summer as previously forecast. And you and I have talked about how this kind of gives greater flexibility for Chairman Powell to increase rates sooner if necessary in this fight against inflation, which again is not as transitory as initially believed. I think when you start to look at both the statement and the Q&A session, the change in the taper itself, it reflects the inflation developments as well as the improvement in the labor market. The Fed will continue to adjust that pace if warranted by the economic outlook. But I think it's interesting. All members of the FOMC did see maximum employment being met in 2022. So that dual mandate of controlling inflation and achieving maximum employment it seems to be on the horizon. The dot plot now reflects 3 quarter-point rate hikes in 2022 and 3 hikes in 2023. Another thing that was important to note from the Q&A session, the Fed will not raise rates until its asset purchase program is concluded. So you're not going to see them raising rates and buying. Nasdaq-100 at one point today was down over 1% at its low during the session. It's since rebounded and is trading in positive territory. I think in general that speaks to, number one, the fact that we have kind of a concrete plan here as to what the Fed is anticipating and the actions that they will be taking. And beyond that, it sort of underscores the strength of the economy, right? That the economy can handle 3 rate hikes, and again with that maximum sustainable employment potentially being met next year, all kind of data points that do suggest strength of the economy.
Right. It's interesting because as I look now, actually the Nasdaq-100 and S&P are tied, right? And before we saw that the Nasdaq-100 was really trailing behind the other indexes. So to your point, I think that uncertainty was taken out of the market a bit now that we have a little bit more clarity and we can think about moving ahead after what we feel like we've been talking about, at least for the past couple of years here. So let's talk about a big event that's happening for the Nasdaq-100 on Friday as we learn about the new entrants coming into the index and a couple of the companies that will be making an exit.
Yeah, so on Friday after the close, or around 8 p.m., it was announced the new members of the Nasdaq-100, and in the annual reconstitution that will take place after the close this coming Friday, and will be effective before the open on Monday, December 20th. The 6 new entrants to the Nasdaq-100 are Airbnb, Datadog, Fortinet, the Lucid Group, Palo Alto Networks, and Zscaler. 3 of those names are graduates, so to speak, from the Nasdaq Next Generation Index. So, companies that are kind of have been growing from the mid cap up into the large cap and now have sort of made it to the big leagues. Those 3 are Datadog, Fortinet, and Zscaler. It's interesting, right? I mean, we talk about innovation and companies' commitment to R&D. We talk about patents and intangible assets, and kind of underscoring the fact that Nasdaq 100 companies have exposure to a lot of these kind of new age digital themes that exist in the market. And it's interesting to note that three of these companies are prominent players in the world of cybersecurity. Another one very prominent in the world of data analytics. We have an electric vehicle maker and sort of an online booking company. So certainly kind of goes with the notion of the most innovative companies on the planet. The members that are leaving, however, the Nasdaq 100 would be CDW Corp, Cerner, Checkpoint, Fox Corp, and Insight Corporation. Oh, as well as Trip.com. Now, I mention this because kind of moving out of the Nasdaq 100 isn't necessarily the worst thing, right? I mean, it's driven by markets and market participants. But you look at companies that are kicked out of the Nasdaq 100. A lot of those companies do eventually move back up into the Nasdaq 100 on average after about 3 years. And 12-month performance for those companies that are kicked out of the Nasdaq 100 is 19.5% with a medium return of 12.1%.
Well, that's
so not
that's not
necessarily
bad.
a death knell.
No, that's not a
Right,
bad
exactly.
thing. So, Ryan, let me ask you about the methodology a bit. How do you determine what companies go into the Nasdaq 100? Do they have to be listed on Nasdaq for a certain amount of time? Is there a market cap or a return that needs to be achieved before they're considered for inclusion?
Yeah, so when Nasdaq 100, quite simply at the top is the 100 largest companies listed on the Nasdaq exchange ex financials. There are some seasoning requirements for 3 months, and you see, in the case of somebody like a Palo Alto Network or a Lucid Group, you will also see companies that change their listing from New York Stock Exchange to NASDAQ. So, kind of the main driver is you must be NASDAQ listed and you can't be a financial company as defined by ICB. But we've seen a couple of companies over the past 2 years change their listing from NYSE over to NASDAQ. So I wonder if this is a kind of a growing trend on that front as well.
Well, to be included in NASDAQ 100, it could potentially be good for stocks because passive investors need to include said stocks if they are mirroring the index overall.
Yes.
Right. So sometimes we see that pop when we either get the news of the inclusion or once they start as a member, this Monday as a NASDAQ 100 constituent.
Yeah, so I think we're very excited for the new constituents.
Right.
We'll keep an eye on whether or not that trend from changing of listing continues. Like I said, we've been seeing a little bit of that. So, to your point, I think the fact that they are Nasdaq listed does allow them to be included in the 100, and by extension, then a member of QQQ and QQQM.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.